Hello, everybody, and welcome to ARMR Investing. We're a virtual hedge fund experience. You are the portfolio manager sitting on the trading desk with us. And what I'm going to share with you right now is how to make money trading the S&P index. The number one stock in focus for us, SPXL, which is triple the S&P. But we've got guys on our trading desk using this information to trade options. So that can be done using it to trade the triple Qs, TQQQ, if you want to do that, triple the Qs. So what I'm going to share with you is a way, it's our way, it's how we make money trading the S&P every single day. That's our focus when we're day trading. We're looking to extract alpha from the market, capture upside when we can, protect capital when the market's cratering like today. So I'm going to show you not only how to make money trading the S&P, but also how to avoid a collapsing day like today. Bonus, I'm going to share with you really the most important indicator for us when it comes to trading the indexes, and that's the average true range. Now, you've heard me talk about it before on this channel, and don't forget, if not already done, go ahead and subscribe to the channel. You can always decide if you want to work with us on our trading desk live. We have a 5-day free trial, so you can hop on in and see us do this as it's happening right down there. ARMR Investing Trial, ARMR Investing Trial, okay? So consider doing that if you'd like. Let's dive in now. We're going to look at these charts. These are 3-minute bar charts. So we use 3-minute charts for our decisions. We drill down into minute charts when we're managing our stops, okay? And this is how we made money trading the S&P 2 days ago and why we did not lose any money trading the S&P long today, okay? In fact, we made a little bit of money this morning, and I'm going to show you how we did it. Here we go. So what you're looking at are two screens, split screen. This is the NASDAQ QQQ. This is the S&P SPY. So we're using the ETFs for our charting purposes, but this information can be then used to trade options, to trade futures. It doesn't make a difference. My favorite asset to trade is SPXL, which is triple the S&P, and TQQQ, triple long the Qs. By the way, the strategy I'm sharing with you is a long only strategy. So you can take this information in short if you want. It's just not what I'm trying to do, right? So what I look to do every day is sleep on a large amount of my cash in my portfolio and then come in every day and get long to capture upside if it's there. And if not, hey, guess what? I'm collecting almost 5 1/3% in treasury, US treasury bills and money markets. So this is a conservative way to capture alpha, but still protect capital. That's what we're doing here. All right. So you're looking at a 3-minute chart. All the lines on these charts are drawn by an algorithm that we have here. It's called the price movement profiler. We use, and I'm going to just drag this across right now. We're going to talk about the S&P first. We're going to look at these 2 days of trading. Okay. We're looking right here. This is yesterday's trading, and this is today's trading. Yesterday, we made a lot of money. Today, we actually booked a profit this morning, but we're going to call it a break-even trade. Let's call it what it is. We had a small gain, but it was a break-even trade, and we avoided the entire collapse of the market. Okay? So we use volume-weighted average price as the core of what we do. That's the black dots, the VWAP. Standard deviations 1, 2, and 3 above. We use an opening range of 15 minutes. Easy for you to create that on your own. We have Fibonacci extensions 1, 2, 3, and 4 above and below the opening range. And then, and perhaps I wouldn't say most important, but very important, what you're going to see here is this blue line right here, this cyan line right in here. Okay, this light blue line down here and right here. Okay. This is the average true range. Now, you could find the ATR with whatever trading software you're using. What we did is take it off the shelf and infuse it with a volatility component. So When you get a normal average true range, it will be a straight horizontal line across the page in the morning. You're taking basically the average true range of an asset over X amount of trading days, okay? So what we do is we infuse volatility, top day, multi-day, and it changes where the ATR prints every day, and it makes it dynamic throughout the day, okay? So when we see here, these green arrows here, when we see the ATR stair-stepping higher, this is the ATR low, okay? And we see the ATR high horizontal near the fourth Fibonacci up on the day, that is the number one setup for us to be long for the day. And what we called this trade yesterday was the gap and go trade. It closes here, it gaps up here. The white box is our lock and load box. And when we take out the high of that box, that's the green buy trigger. And then we just bank out as it runs all day, managing our stops to make our money. Okay. And so when I'm trading the SPXL, I'm taking a position at least 300% exposure to the S&P right here. And in fact, yesterday it was 375% exposure. Okay. So we're capturing massive upside on the run, and then we're going back into cash. Why did we avoid the big down day today? So you see how we made our money, right? We have 5 buy triggers we use on this desk. When we see them, we hit it. The buy trigger yesterday was the gap and go setup. We have a playbook we're building for all ARMR insiders. So subscribers are going to get this playbook. All right. It's, going to be X amount of pages long. It's just like football coach on the sidelines got his playbook. There's so many ways. There's just so many ways humans are going to interact with the S&P every day. The faster we recognize the footprint, the play, the better we can get on it and make money or avoid losing money. Okay. So the play yesterday was gap and go. We have 5 plays in the book. Gap and go is one of our favorite. And that's how we banked out yesterday on the gap and go setup. Now today, take a look at what the ATR was doing today. It's the exact opposite. And we'll draw it together. Look at the downward move in the ATR this morning. Huge down moves in the ATR high of the day, right? So the ATR high of the day, there's a low of the day and a high of the day. Yesterday, the low of the day was stair-stepping higher, telling us that was a day to look long and stay long and strong because it's going to run, because it just kept pressing higher. Okay. Today's the exact opposite. It's cratering in the morning. And then something happened that was very unique. And I'm going to show you the NASDAQ 100 now. It happened on the NASDAQ 100. When the ATR, you can write this down so you remember it. Okay. When the ATR high of the day crosses below the ATR low of the day, that's what that yellow box is. That tells us we're in the midst of a 100% down day. And what that means to us is every single rally, if there is any, every rally is going to be met with massive selling. Okay? That doesn't happen very often in the big indexes where the ATRs cross like that on the negative side. But the probabilities are incredibly high when that happens that there's no rally that's going to work into a real big up trade. Every rally will be met with selling. So theoretically, it's a day you could be shorting. I chose not to short, but it could be a day that you would be shorting. Okay. So going back to the S&P, we have a really negative ATR all morning, but we did have a gap and go setup again. Market gapped up, pulled back, and this is actually not a gap and go setup. This is actually a different setup called a VWAP setup. So market gapped up, pulled back, and when it goes above the VWAP, we get long. Okay, so gap and go is over here. And that's a gap up and go up. It never goes below the VWAP. Okay, you can see that right here. It never goes below the VWAP. It holds the black dots and takes off. Okay, but this morning what happened was it opened and traded below the black dots, which is the VWAP. And when it goes above it, that's the buy trigger. When it extends 1 bar, we raise our stop aggressively so that we're in a profitable position. When we put a trade on and it extends like that, we immediately raise our stop to break even or a little bit more than break even to make sure we get paid for our efforts. On days where the market rips higher, it never challenges that stop. So we're not afraid to get stopped out. We say, thanks. The market's telling us something's wrong today. So we're out this morning extracting a small gain, but let's be honest, it's a break-even trade. Okay. And then the market craters. We avoid the big down day by watching the ARMR average true range indicator and by using smart stop loss disciplines and extracting the information from the market. When the stops are hit, it's telling you something's wrong with the day. So stop trading. That's my thought for you tonight. I hope you found it helpful. If you have an interest in subscribing to this channel, go ahead right there. If you have a question for me, put it in the comments section. I'm checking this during the week. I'm happy to answer any questions you may have about this conversation. And I look forward to seeing all of you again on the trading desk. You guys have a great night.